Okay, welcome to this Peep Show. We are Tuesday, the 31st of March 2020. Sylvain, le Canadien, with you today for a new Peep Show, for a new live together. Is it the end of the coronavirus crisis? This is the question we will all answer today. So, this question is very interesting because if you look at the article and if you read what is being written and exchanged on social medias, on mainstream medias, so on every journal, every article that is being published, everyone is asking if it is the end of the crisis, if we've seen the worst part of the crisis, if we will have a market that will be bullish again and that will recover, I would say, most of its losses that occurred since, I will say, mid-February. So that's the question. Now, yesterday, not yesterday, this morning at 2 a.m. Europe time, we discovered and we took note of the numbers of China. So the Chinese manufacturing activity just increased again and went up by with the final number at 52. Previously we had a number around 35.7, which was the worst, I'll say, the worst number ever published and released by China. So the manufacturing activity is back in the game. So now we have to monitor two things. The first one, how accurate are those numbers, how efficient and how real are those numbers? Second, is it true? Is it true? Will there be will there be another coronavirus crisis, a second round or not? Okay, so for now, what we can see on the market is that the S&P 500 is under a resistance level for now, and the market is bullish. The market is bullish and will be bullish until mid-April. Why mid-April? Because in April we had one major event, which is the start of the earnings season in the United States. So when the earnings season will start, we will see the real impact of the coronavirus crisis on the US economy. Also, mid-April, normally the lockdown in Italy and I would say across European countries will start to disappear. So the economy will be back and will startly I would say work again. So we should see an increase in the global activity, but again the activity will not start again at 100%. It will take time to get back to the I would say previous level of activity. So I will say we are in a bullish market until at least mid-April. So the volatility, and I expect the volatility to be lower until mid-April. So we still have 1 to 2 weeks of low activity, and then we'll see what will happen. This is definitely what I have in mind. If you look also at the German stock index, the DAX 30, we were under a resistance level this morning around 10,000 points. We had a lowest point at 9,650 points. And again, this market is bullish and it looks very bullish. And for now, there is, like, I would say, a market that is calming itself. Looking at the oil prices, I said to you many times before that oil prices were the stuff to monitor if you want to have a clear outlook of what can happen on the market. Donald Trump and Vladimir Putin just talked to each other yesterday night, so Monday night, and they agreed on sending each other's energy minister to talk. Okay, their energy guys will talk together and will try to find solutions, find some common ground, or discuss the premise of maybe an agreement on the oil production cuts. So this is something that we will also need to take into consideration if the United States and Russia find a solution and work together on the oil market, the oil prices can definitely go higher and higher. So with the final, I will say, oil prices, oil fundamentals being back to be bullish again, we can have a sustainable bullish market. But now it's not the right time, and it will not be easy. I don't think that the United States and Russia will find an agreement that easily. It will take time. It will take a lot of negotiations, like the trade war with China. It took more than 1 year and a half to find some common ground and some good discussion points. The same can occur on the oil market, and so I'm not expecting it to be fully bullish at the moment. All right, guys. So we are pretty much good. The US market is opening in 18 minutes. So one thing that you should also monitor and focus your attention on is the commodity market and the gold prices. So basically, I read an article this morning saying that gold is right now the best commodity to have in your portfolio, that you should not be on the equity market, etc. If you look at the gold prices, effectively, gold since 2020 is very bullish. Okay, we've won something like 3%, 5%. Okay, if you compare it to the S&P 500, of course we have a better price, because the S&P 500 is down 21% since the 1st of January. We are up 3% here on the gold market. But again, gold should not be used as a speculation vehicle and investment. Gold should be used to hedge yourself against wild moves and to use gold as a commodity to store your cash. Okay, but speculating on gold is not something very wise for me. You can use gold to maybe use it if you lose faith in your domestic currency. Okay, so gold can act as a proxy of your currency if you don't have any faith in your currency. Because your currency, for example, you are living in a country where there is too much inflation and you are not willing to keep your currency in change, so you are willing to buy gold to hedge yourself against your currency fluctuations. This is something that you can do. Okay, why not? But if you want to speculate on the pure value of gold, I don't think that this is something very wise. On the very long term, you will definitely you would make money, but gold primary, I will say, function is not to be used for wild speculation, but more for edge against inflation and edge against a loss in face of your domestic currency. If you look now at the bonds market and at the rates, you will definitely notice something very interesting. We have here a very, I'll say, calm beginning of the day. So compared to what we've seen during March, those trading sessions are less, I would say, aggressive. We are still losing 4 to 5% on the bonds market. If you look at the rates, and yeah, that's pretty much it for now. Okay, that's pretty much it for now. Everything is in order here, so as you can see here, we don't have any discrepancies. So because a few weeks ago, if you looked at the chart, we had rates that were higher on the short term and lower on the very long term. So that's what we call an inverted yield curve. That was I will say market discrepancies. But now it's okay. So the bond market is quite steady today. We are still waiting for Wall Street to open, and it will be the case in less than 14 minutes. And it will be all for our Pip Show for today. So guys, if you have any questions, you feel free to ask your question on the We Love Arya World Facebook group and or on the YouTube on the comment on the YouTube channel. And also don't forget to like, to subscribe to the channel, but also to click on the link into the description. You will find the Arya starter pack, where you will find educational resources that will help you discover algorithmic trading, but also discover the whole ecosystem that we've created for you to start taking your trading to the next level and start also discovering algorithmic trading. See each other tomorrow. See you and have a nice day.